explainer. So today we're diving into a trading theory that it's just blown up online, right? The smart money concept. You've probably seen it everywhere, but what is it really? So let's kick things off with a pretty fundamental question, one that's really at the core of this whole thing. When you go to place a trade, are you actually playing a fair game? Well, there's this really popular theory out there that says, no, not at all. It claims the market is basically controlled by smart money. And, retail traders like us, we're just playing in their sandbox. This idea, the smart money concept, or SMC for short, says the game is rigged. But here's the kicker. It also says you can learn the rules of that rigged game. Okay, so to really wrap our heads around what SMC is all about, we've got to start by looking at the players. The theory basically says there are two sides to this game: the big, powerful institutions, and then, well, everyone else. So yeah, the theory splits the market into these two main groups. First, you've got smart money. Think banks, hedge funds, institutions, the ones with just massive amounts of capital, enough to literally move the market. And then you've got the retail traders. That's probably you, me, individual traders just trying to make a play. The whole philosophy, it really just boils down to this one simple idea. You can't fight the giants, right? So don't even try. Instead, the goal is to learn how to read their footprints on the chart. If you can see where they're going, you can follow them. Okay, so if we accept the premise that smart money is running the show, what's their game plan supposed to look like? According to SMC theory, it's not just about them placing huge orders. No, it's way more active than that. It's about them actually shaping the market. The idea here is that these big institutions use their huge resources to create these very specific market swings. Swings that just so happen to benefit them. We're talking about setting traps to take retail money, intentionally pushing prices to trigger all those stop-loss orders, and basically engineering the market for their own gain. But that's the million-dollar question, isn't it? If these big, manipulative moves are really happening, how on earth is a regular trader supposed to see them? And that brings us to the most critical part of this whole concept: learning to decode the special language, the lingo that SMC traders use to spot these footprints. Right. So SMC has its own unique vocabulary, its own set of terms to describe what's happening on the chart. And if you want to apply the strategy, you've got to learn the lingo. First up, we've got the order block. A good way to think about it is like a hidden loading dock for institutional trades. It's a specific zone on the chart where SMC traders believe the big players are quietly building up these huge positions, before they unleash their real move. Next up is liquidity. Now, in the world of SMC, liquidity is basically the fuel that makes the market engine go. Think of it as any spot on the chart where there's a big cluster of orders just sitting there, especially stop losses from retail traders. The theory goes that smart money will intentionally push the price to these zones, grab that liquidity, and use it to power their own bigger move. And then there's this really cool concept called change of character, or CHOCH for short. This is a huge signal for SMC traders. It's when you see a sudden, abrupt shift in how the market's behaving, a sign that the current trend might be running out of steam and a reversal could be just around the corner. Okay, so you've got these different pieces: order blocks, liquidity, CHOCH. How does it all fit together into an actual strategy? Well, proponents of SMC have put it all into a pretty practical framework. It's actually a surprisingly simple three-step approach. So it goes like this. Step 1. You determine the trend. You use things like market structure and that change of character to figure out which way the market's generally headed. Step 2, you hunt for a high probability order block, that spot where you think the smart money is getting ready to make a move. And then step 3, you build your whole trade, your entry, your stop loss, your profit target, all based on that order block. And this brings us right to the heart of the debate around smart money concept. Is this thing a truly revolutionary new strategy? Or is it just a rebrand of stuff that traders have been using for years, just with new, fancy-sounding names? To really get to the bottom of that, we need to put SMC side by side with a classic methodology, something that's been around forever: good old price action trading. And here's the crucial difference. Both of these methods are looking at the exact same price charts, but they're telling a completely different story about what they see. Classic price action is all about the what, identifying patterns like a double top. But SMC tries to explain the why. It says that pattern exists because of what the big institutions are doing. But at the end of the day, for any trader, there's really only one question that matters. Does it actually work? Does this theory hold up in the real world? And can it help you be a more profitable trader? And honestly, the arguments are really compelling on both sides. You've got supporters who absolutely swear by it, they love its structured way of looking at the market, and they'll tell you it's just a more advanced take on solid price action principles. But then you've got the critics who question the whole foundation. They point out there's no real proof of all this manipulation, and some say the unique lingo just makes everything more confusing than it needs to be. And that really gets to the core of the skeptical argument. Look, the patterns that SMC traders point to on the charts, they are absolutely real. No one's debating that. The debate is about the why. There is zero concrete proof that those patterns are caused by intentional manipulation from smart money. So while the patterns are there, the story that SMC tells to explain them, well, that's still just a theory. So we're left with this big question. Is smart money concept the actual key to unlocking the market's hidden secrets? Or is it just a really compelling narrative, a new language for a very old game? At the end of the day, for any individual trader, the only thing that really matters is the answer to one question. Does it work for you?